So you wanna go to war with me? You're talking like you think you're royalty. You think that I'm afraid, but I don't break. I heard you question my stability. You think I'll fall just like a guillotine, but I am here to stay. Won't look away. The storm is coming, so you better start running. No, you can't control, feel it in my bones. I'm coming for the, coming for the.
All right, guys. Happy Wednesday. The day is here. The day is here for AMC Q4 Earnings. We're going to find out what time they got that call scheduled for. 5 p.m. Eastern, 4 p.m. Central. It's 2:45 Central right now. We got the markets closing in about 15 minutes. AMC is up 2.5% at 492. And we should get earnings sometime right after the market closes. So we'll keep an eye out for that. Hopefully they don't make us wait too long. So we'll have something to talk about while we're waiting for the call to start about an hour after the market closes. Hope y'all have been having a good day, a good week so far. Welcome back. Cancel Bubble, I see you in the chat. Anya, good afternoon. Cant14 says, I'm ready to hear AA talk about this anemic box office. Hopefully, he brings the energy of the IMAX CEO yesterday. That's what I would like to see. I certainly don't want to see any anemic box office talk. Although he can't sidestep it, he's going to get asked questions about, what do you think about Q1? What's your outlook for this year? Please, Adam, for the love of God, be positive, like the IMAX CEO yesterday. Groundhog Eater, what's up? Sufyan, how you doing? The day is here for the Goodwill Doubters. Yes, we got a bet on the Goodwill impairment. We're going to find out who is the winner in that bet. Sufyan and I don't have a bet, but I do with another YouTuber. So I forget what we bet. I think it was, I bet under, if there was a goodwill impairment, it would be under 100 million. You've heard some people say that the entire that the entire goodwill was going to be wrote off this quarter. Lord help us if that is not the case. What is the goodwill on the balance sheet right now? I think it'll be minimal impact, but it's a complicated calculation. So we'll find out here. $2.4 billion is what we have. Almost $2.5 billion of goodwill. That'd be a major spanking, not in terms of cash burn, but just the way that it would affect the income statement. So let's hope that it's minimal. Let's hope that the pain on goodwill impairment was taken back in 2020 and that they can use some little bit of finagling that the business is recovering to not do any major goodwill write down this quarter. There might be some. We'll find out. Titty Freckle says he's not going to say anything that benefits the apes. Oh, man. I know people are really divided. People are really divided on what, when he said, I will have much to say on Wednesday. I've seen the full spectrum of comments out there in social media. From people saying he's going, on the one hand, the pro side, he's going to announce a dividend and a share buyback, and then on the hater side, he's going to announce more dilution or bankrupt the company or say he's retiring. What a wide variety of opinions. That's what makes this play so fun. You guys have so many ideas. I'm somewhere in the middle. I don't think there'll be any major announcement today. Good or bad. I think he'll talk about how Q4 was difficult due to the writers and actors strike, how Q1 also will be the same, although he's optimistic about Dune 2 helping out Q1, and that the rest of this year, as each quarter goes by, it'll get a little bit better, and then 2025 is forecast to be a much better year. I think that's what he'll say. Will he have some surprise announcement, pro or con, beyond that? That's what we're all here to find out. Rambo 3, what's up? Interstellar Ape says, I just re-listened to the Q3 report and summarized it with key points to watch for in Q4. Where is that posted, my friend? We can pull it up while we're waiting. Chris says, I'm nervous for this call. We're all nervous. We're all nervous. 496 is the stock price right now. Moving on up here in the last 10 minutes of the day. Camp 14 says he might not say anything that benefits the apes. He might say something that benefits him. He got a ton of new shares this quarter. Hey, if he says something that benefits his shares, that benefits us, right? I firmly believe that the executive team over there, since they are mostly compensated in shares, have the intention of fixing the company. And over time, that will result in the price going up. It's going to take a little bit of cooperation from the economy and from Hollywood to put out enough good movies. AMC's just been like treading water here, rowing in the same spot, while Hollywood's been poking holes in the bottom of the boat. And yeah, they were forced to raise a little more cash because of the situation with the movies. Maybe we'll get that behind us and we can look forward to next year. We'll find out. Michael says, hopefully we don't need any more dilution for a while. I hope not. I told you guys over the past few live streams that we've done, or daily, if you're talking to me in Discord, that the one main thing that I'm looking at, if he doesn't say anything, oh, this was the other great debate. Is he going to, people want him to say today, no more dilution. And other people are convinced he's going to announce more dilution. Again, I'm kind of in the middle. I think with $1 billion on the balance sheet now with the cash raises they did, minus whatever cash burn we find out about today, if that cash burn in Q4 and Q1 that we're in right now is minimal, then I think we sail through the rest of this year by the skin of our teeth, and that $1 billion will be plenty. If it's a major cash burn Q4 and Q1, then I get a little more worried. So that is mostly what I'm watching for today. The main thing I'm watching for today is what was the cash burn like. And then say about March 15th, I'll be able to make some prediction about the Q1 cash burn, the quarter win right now. And then I'll be able to, if you want me to, I'll share with you my thoughts on risk of more dilution if we don't hear anything today. So that's my plan. If we don't get any news from the company around March 15th, I'm going to be taking a self-assessment. What is my risk here? What is my risk of more dilution? And I'll be sharing that in the Discord. If you guys want to talk about it, we can talk about it here. I don't know if I want to share it here. A lot of people that get mad when I share my DD. He's trying to influence us. He's sharing his opinion. He's trying to influence us. Maybe I'll just share it in the Discord. Fuck it. Corey says, our planet, peace, people matter. Yeah, Interstellar Ape, where did you post it? Is it on, oh, he says, yeah, you can you, are you on Twitter? You can send it to me there. Cheers. I got another flavored water here today. Michael says he can't say he won't dilute, especially if AMC gets a good run up. I said the exact same thing to somebody either, I think it was around 5 or 6 a.m. this morning, Michael, and kind of why I'm in the middle of the dilution thing. As much as I'd want him to say we're not going to dilute the rest of this year, I don't think they're dumb enough to paint themselves in a corner and say dilution is off the table. Would I love them to say that? 100%. Do I think they will? I think it would be it would be pretty bad if they said that and then had to renege on it because something happened 6 months from now. So I'm not expecting them to say that, but man, it would be nice. It'd be nice for all of us if he did. That would have some positive price impact. Chris says, hopefully he talks debt restructuring on the call. It'd be nice if a analyst, I don't think he'll talk about it voluntarily. Maybe an analyst or one of y'all's questions will pull some comment from him about the debt restructuring. Certainly on everybody's mind. Maybe someone will ask that towards the end of the call and we can get some insight into what they're thinking, because we've all been speculating that it'll happen at some point this year. Some think sooner, some think towards the end of the year. I'd love to get some more clarity on that too. Oh yeah, before we run out the last 3 minutes, let me check. I had a couple of calls on AMC that are in the money. They don't expire till next week, but maybe I should just go ahead and offload them. Let me check. 3 minutes. Let them ride and hope that it's good news and I make a ton of money, or just take the small gain. What to do? I'm up 35%. I think I'm just going to sell them. I got plenty of shares if it runs up. Sell to close. Hurry up, Tony. 1 minute. I'm going to run out of time. All right. William says, hoping we push over $5 by close. We are closed right now at $4.99, and the stock is at holding flat here in the first minute. Let me pull up AMC's website and Twitter and see if we can get some news here on the earnings drop. John Michael says, is it only my broker or the bid ask are never accurate and delayed a bunch? Some brokers, John, will have a 15-minute delay on options prices that you see until you go into place an order. It'll show you the real time. But some of those brokers also have an option to pay for real-time option quotes. So check with your broker if they have that. But no, it's not unusual to see a disconnect between what you see on your regular screen. Like if you're watching Webull here, you may see one thing and then you go to your other broker like Fidelity or Schwab whatever to place the order and you see a different price, that's because by default, we will show you a 15-minute delayed option order, option quote. Parabolic FOMO Dip Rip. I love the name, my man. Jim Eagle, welcome, and welcome to Parabolic too. Shane says, I hope to get out of this stock soon. I bet you're not the only one, Shane. I was having a conversation this morning with somebody who he owns a substantial amount of shares. Like, you guys would be shocked how many shares people have been buying down in this $4 range. And he said, Tony, I'm just getting tired of this play. It's not doing anything. And I said, yeah, but a flat trading stock where you own a metric fuck ton of shares is beautiful for selling covered calls. I mean, dude's making $1,000 a week selling covered calls. Why are you going to be bored about that? Boring can be good sometimes if you have your eyes open to the trading possibilities. Anya, keep an eye on the chat for me, Anya. Let's only boot people if they're being mean to somebody. We welcome all opinions here. You don't have to agree with me on anything. I know everybody's got a very diverse set of opinions, and that is cool. I deal with it every day on Twitter, YouTube, and even in my own Discord. All opinions are welcome. All I ask is that you behave like an adult. Let me refresh the press release screen and see if we got any news yet. Still nothing. Parabolic says, I just sold 10 covered calls today while the IV was high. I have 2/3 of my position with covered calls on it, Parabolic. And I left 1/3 open in just in case there's some good news. And you know, if all I don't want all my shares taken away from me, but I'm not expecting some massive spike. So I have my covered calls set high enough where I made a decent amount of money this week. But if they get taken away from me, if they get exercised in a run up, I'll also profit on that. I have $6 strikes and 650s, which is all well below my cost average. So if they get taken away, that's fine also. And then I have 1/3 of my basket left, just in case it had some unexpected great news and we had a big run up. And if it goes down, I'm just going to keep doing what I'm doing. And depending on what they say, of course, I gotta hear this call. I gotta see what's on the 10K. There's no news yet that I see, not on AMC's website. Let me check the SEC Edgar. Nothing on there yet. If you guys see something on Twitter before I do, I'm not checking Twitter. I'm just trying to refresh on AMC's website. Nothing yet. All right, back to you guys. The call starts at 5 p.m. Eastern, so 1 hour from now. We'll be streaming the call live. I'm just going to sit back and listen to it with you guys. but we are expecting the earnings to drop prior to that. What exact time, I don't know. Yeah, this kind of volatility pre-earnings is always a little bit normal. I've seen, on many stocks, it bounces down, it bounces up, bounces all over the place, and then we'll know really. The algos will decide in about 2 seconds after the press release which way it's going to go. The algos that can read everything much faster than us. What do y'all think? Let me put up my expectations here while we're waiting. If you weren't on last night, I had I'm expecting revenues to be at just over 1 billion, say 1.04, 1.05 billion dollars. And that is very close. This spreadsheet actually came out really close to what the analysts were expecting. And then when I factor in all of the expenses and such, and I'm not including anything for goodwill, which would dramatically change this if there's a goodwill impairment. I'm coming up with negative 34 cents per share, negative $89 million loss. My range, depending on what percentage of the box office we got, is as bad as 104 million and as good as 67.8 million. This was a tough quarter to estimate because I had to put in a fudge factor for distribution deals, and we have the goodwill piece of it in play. So we'll find out here shortly. Still nothing. Lowboy says Salesforce, Paramount, and Okta have reported. Tanton79 says AMC to 389. I saw people posting they think it's going to drop to 250 today, Tanton. A lot of negative Nellies out there this week. Headstock Harem, how you doing, amigo? Oh, the suspense. I should have got my popcorn out. Is it Magus? Yeah, 250. The people that were saying 250 are the most adamant popcorn project, Adam Aaron, AMC hating folks. I don't know how they they say they still own shares, but they're predicting it's going to go down to 250, and they're happy about that. I just don't understand some of these people. I get it. If you're mad, I get it. But to hope that everybody loses money by the stock dropping 50%, like some of these people are. Shin Kyoku, good afternoon to you. Puff Bear, good afternoon. CPA says, when does GameStop announce earnings? Late March. I don't think that they have announced a date yet. And I got a lot to say about GameStop, but I'm biting my tongue. I think they will. They have a good shot at posting a good profitable quarter this year, which probably will get them a good overall profitable year. However, I think that the GameStop fanatics who put out videos every day on GameStop are wildly misleading people with price expectations about what's going to happen once those numbers come in. If you take a reasonable PE ratio off of what I expect earnings to be on GameStop, then I can't say what's going to happen on the day of earnings, but I think that over time, in the weeks and months following GameStop earnings, unless they have some spectacular new announcement, some strategic initiative, an acquisition or something, the expected annual earnings of GameStop times a reasonable PE ratio, say 20 to 25, tells me that the GameStop price is likely to trend down, not necessarily on earnings day, but over the weeks and months following earnings. How can we stop that from happening? Some big news from GameStop. Something that gets people so excited that they say this company is actually worth this price or more. Jim says, I hate myself for investing so much in AMC and not dumping when it spiked on the ape announcement. Just sat and watched. I know there were a lot of people, and still are, pushing the buy and hold mantra, and that's not something that we've been advocating here. We've been advocating #evolve for a long time. I had one Marine tell me, if Tony's advocating that, we need to kick him out of this community. But somehow, people who evolved in their thinking are the ones that are sitting okay right now and not all up in their emotions. What's GameStop doing? 14.22. IMAX closed up 11% today on their beautiful earnings call yesterday. Cinemark at 17.20 on the close, 16.90 in after hours. Neil, yeah, that's a good point. I mean, if Ryan Cohen announces something, and I agree with you 100%, if there's some announcement like they bought Bitcoin, like you said, and they recognize a major improvement on the balance sheet because of something like that, any news like that will change the dynamic. And so I hope there is that. I own a little bit of GameStop at the current price. My cheapest recent buy was $13.75, and my most expensive buy on GameStop is in the 14. So I'm okay riding it until earnings. I own it just in case he has some good announcement. If it drops a little bit, I'll just step out of the play. If there's no good news and it starts going down, I'll just dump it and buy when it bottoms out. I'm just being, I'm calling it like I see it. I'm in the play with you guys on GameStop, hoping they have some good news. But if they don't, I think that it trends down, even with a good Q4 earnings. AMC, we're still waiting on the earnings. Let me check Twitter now. I'm not seeing anything on AMC's website. Slot Massacre says the news is out. I don't see it. Oh, I do see it. All right, let's take a look. And right now we're down 2.5%. So let's see what we got here. Fourth quarter revenue grew to $1.104 billion. What did I say it was going to be? 1.04. 1.104. So they beat my estimate by $100 million. That is good. Net loss improved to $182 million. That is way more of a loss than I was expecting. Net loss per diluted share was 83 cents. I had it at 34 cents. Oh my gosh. Yeah, because the net loss came in way worse. So we need to see the balance sheet and figure out why. If it was goodwill or something else, we'll get down to there in a second. Adjusted net loss was 54 cents. Net cash used in operating activities was $77.8 million. All right, let's scroll down and see what we got here. Impairment of long-lived assets was $106 million. I need to see a further breakdown on that. Uh, 83 cents negative. Let's look at the balance sheet. Cash and cash equivalents as of December 31st was $884 million. Net cash used in operating activities, $77 million, $63 million in investing. And then they brought in $294 million. So the free cash flow was $149 million. This is not bad. I was thinking that we'd come in somewhere around $125 million burn out of the billion that I estimated they had at the before we took out any cash burn in Q4. So 884 is okay. My worst case scenario would have been like 750. That would have been horrible. 884 I can live with. All right, I'm going to put the stock chart back up. We got the lay of the land here now on earnings and revenue. And I will plug all of these numbers once I get once we're done with the call. I'll go over to the SEC website, pull the full official filing, plug it into my spreadsheet, and I'll do a comparison video of what I estimated versus what they actually did, and see what improvements we can make to the spreadsheet for next time. As far as the impairment of long-lived assets, it says during the year we recorded non-cash impairment charges related to our long-lived assets of $49 million on 68 theaters in the US and $55 million on 57 theaters in the international markets. That's pretty much on par with what they did last year. So it looks like there's no major goodwill write-down. 425 now on the price. Andrew says his puts just went in the money. Billy Bobby, looks like discounts tomorrow, Billy says. I'm Mixmaster, how much longer till we're on the OTC? I don't think there's any risk of AMC moving down to the OTC. For those that are tuning in, the actual call where we get to hear from the execs will be in 40 minutes. I guess it's safe to say that my covered calls are going to be secure unless Adam has some news that we don't know about. I'm still scrolling through these 20 pages to see if there's anything else that jumps out at me. There was a gain on extinguishment of debt of $45 million. Those debt for equity swaps. That's about in the neighborhood of what I would expect. That's a non-cash gain, but it shows up on the income statement. Yeah, guys, don't panic. Just calm your tits. You won't really know anything until you hear them talk. It dipped and now it's going back up a little bit. Just keep your emotions in check. You've all been here before. It's not your first earnings. Net cash used in operating, oh, that's for the full year. They improved for the year compared to 22-22, they improved their net cash used in operating activities by $200 million. 413 million used in operating activities in 2022, 215 million used in 2023. And I expect this year, 2024, will be on par with 2023 based on expectations for box office at the moment. Still early in the year. Anya says, was that a lot of volume that drove it down? There was only a slight uptick on the 1 minute, Anya, on that big red candle. Let me get to the AMC chart on this bigger screen. Not really a huge volume. That was 73,000 shares, or just no buyers in that moment. That was all algo selling. Phil is worried about crime and corruption. I know a lot of you guys are worried about crime and corruption. I can tell you in my Discord, we talk about that 0% of our time, crime and corruption. We're looking at the financial statements. We're looking at the cash the company has on hand. We're looking at the risk of dilution. We're looking at the company, what is their possibility or probability of refinancing the debt. And we're looking at the box office. That's all we look at. And for me, everything that's happening with the price is easily explainable just looking on those things. Is there shorting going on? Yes. Is there day trade shorting going on from high-speed trading firms? Yes, because keep in mind, if you look at the income statement in the balance sheet and you try and do any sort of ratio analysis, whether it's price to sales, price to earnings, anything, I mean, AMC is still losing money. And it's very hard for Wall Street to assign a value to it. These institutional investors will come in when the company is getting closer to a position where they can book a profit consistently and the overhang of the debt restructuring is out of the way. I think you get those two things on the table later this year, you'll see some institutions coming in and buying this thing up. And by buying it up, I mean, $8 to $12 range from where we're at right now. $8 to $12 range. And that is based on basic Wall Street fundamental analysis on expected earnings and free cash flow. When certain hurdles get taken out of the way. Still a speculative play for Wall Street. Might not be for you, but you're not the big institutions that have all of the money to move this price every single day. Rolf says his 2026 price target is $10. I think that is too low, Rolf. If the hurdles that we just talked about get out of the way, if the debt's refinanced, if they get the debt covenant extensions, the waivers, and that's two different things, and the cash burn, we already know in Q4 was not horrible. If we can squeak by with Q1 cash burn in this range, that'll put us at about $760 million to last the rest of the year, and each quarter is going to be better after Q1. And then Rolf, 2025 box office. If it is at a point where AMC can start having a few profitable quarters, 2 or 3, maybe 4, I think $10 is too low. But I understand you being conservative, and I'm not knocking you on that. It's just my opinion based on what we know right now. What do the analysts say here? Eric Wald at B. Riley's got a $12 price target for AMC, published in January. Alicia Reese over at Wedbush has a $6 price target, published just a couple days ago. Well, fuck you, Alicia. I'm just sorry. That was bad. That was bad. Alicia may end up being right, at least for Q1, Alicia. But you're not thinking that's your 12-month price target? Seems a little bit low. Those are the only two recent analyst updates. Alicia Reese at Wedbush and Eric Wald at B. Riley. If you're just joining us, the call with Adam and Sean. Adam and Sean will be in 29 minutes. Earnings came in at negative $0.83, which was a little worse than I expected. It's even worse than my worst case. And I thought I was being pessimistic. Let's see if any of the analysts here for AMC had a scenario that bad. The earnings estimates, we had one guy that said negative 90 cents. The average analyst was at 69 cents negative. I was at negative 34 cents. What is the share count, by the way? That's another thing that affects these numbers. And we need to know that. Average shares outstanding, 218 million. Okay. So that is what they went with for this. That is different than what I had on here. Let's change that on my spreadsheet. 218,620. Still only upped my number by a couple pennies. Not anywhere close to what we actually came in at. Blazin says, at what level do we expect him to dilute again? Blazin, what I've been thinking for myself is if we got down to 500 million by the end of Q1, that I would be worried they would be tempted to dilute again. Now, I know the AMC executives are looking out when they're doing their forecasting for cash needs. They're forecasting out every quarter for 2 years. So they already know what their cash burn is going to be in their model based on current box office expectations. They know exactly how much cash they're going to have within a reasonable degree of accuracy. They know right now how much cash they're going to have at the end of 2025. What we have to try and get in their head and think is, at what level does the number get so low that they start panicking and saying, we're going to need more cash? So your question is, if it drops to 500 million, would that be the trigger? My answer is a little more complex, because I think we could see, let's see, we're at 880 now. Let's say we're at, hang on one second. We're at 884 now. If we're at 760 at the end of Q1, and then the cash burn will get better the next 3 quarters, I think we could make it to the end of the year, Blazin, and still have $500 million. I think that's a possibility. And then if they think they can skate through with that into a much better 2025, I don't know. That's what you guys should be asking yourself. At what point are we going to get to $500 million on the balance sheet? And at what point is management going to say, it's getting a little too risky in here? We can't go 2 or 3 more quarters with this little cash on the balance sheet. The Slot Massacre says, that does the cash number include undrawn credit? They will probably talk about a total liquidity number that includes lines of credit, but what I'm looking at when I'm talking about cash is actual cash on the balance sheet. So total liquidity, including any undrawn line of credit, would be higher than this number. When does Citi have the right to enforce Chapter 11? So the debt covenants have a minimum liquidity requirement, and from what I recall reading, that number is $100 million. So if AMC got to the point where they were getting down to their last $100 million, that would be a violation of the debt covenant that they could foreclose on the company, force it into Chapter 11, unless there was a compelling turnaround story or the company was able to borrow some more money. I don't think that the lenders want to force the company into Chapter 11. They enjoy getting their interest payments, and it's a hassle to do a Chapter 11. As long as they think the company reasonably has a chance to keep plugging along, as long as they think the company has a chance to raise cash by selling more shares, it doesn't make sense. I know there's people telling you that private equity and the lenders want to bankrupt this company. Even people saying the CEO wants to bankrupt this company. Nobody fucking wants to bankrupt this company. But if things got really dire, like it was, at the worst time in 2020 where literally nothing was open, sure, they were having talks then. But we're not at that point right now. We're 10 months away from a fantastic year. Stinking Rocket says Adam Aaron should take zero compensation until AMC makes money. I would be okay with them redoing the compensation plan. I was just talking with someone on Twitter about this yesterday because I put out a couple explanations about the comp plan, and someone had a really good comment like, okay, you explained how they do it, but is the compensation too high? That's an excellent question. I think that's a question we could have a discussion about. Is the comp plan too high? And compensation is mostly in granted shares that are tied to EBITDA, the EBITDA metric. And EBITDA has been improving, but we're not at we're not at a annual positive earnings yet. So I would be okay with having a conversation about adjusting compensation. I'm sure they wouldn't be, as the executives, they're like, you're not touching our golden pockets here. But I would be okay with having that conversation. No one's going to work for free, unfortunately, except Ryan Cohen. It says here, someone's asking, what was the cash burn? It says, net cash used in operating activities was $77.8 million, and the non-GAAP operating cash burn was negative $0.8 million. I need to look at the full balance sheet. How much did they bring in? 350 million or so from. They raised gross proceeds of 350 million. I'll see what else I can pull up for you. I think it said explicitly what it was somewhere in here. Rolf says the price has not fallen off as far as I expected. Yeah, Rolf, I think like we were talking about earlier in the past few days, I think a lot of what we're going to see on these earnings in here today was already baked in at a what I consider a slightly undervalued price. I think, trading at $384 is a little bit low. That run up, if it would have run up to 550 or 6, that might have been a little bit steep considering what we were expecting for Q4 earnings and news. But in this range, I was not expecting a huge sell-off, even with the news being not that great. Everybody knew Q4 was going to suck, except the pumpers. What about credit cards? What about candy? What about merch? Come on, guys. Come on. You know better than that by now. Sotherig says, Denaro, you were for the conversion and reverse split. I was for the company raising cash, yes, because in my mind, and I still will tell you this, and the invitation is open to any CPA or certified financial professional to come in here and have a debate. The company would have gone bankrupt if it were not for their cash raising activities, which included freeing up shares through the reverse split. Did I ever say that would be a short covering event, the reverse split? I did not. I told you guys explicitly that would not be a short covering event. It was an unfortunate thing that the company had to do to have the ability to raise cash to get through Q4 and Q1. I'm never going to tell you anything different. Anybody who's telling you the company had plenty of cash is a straight up idiot. Bring me a CPA, bring me a finance professional that is willing to go have a debate that this company had no bankruptcy risk. I will have that debate any day of the week. The invitation has been open for a year. Instead, we got self-proclaimed math wizards that hate Adam Aaron that said, by my calculations, and the math doesn't lie, the company would have had $22 million left. Okay, dipshit. $22 million is an automatic debt covenant minimum liquidity violation. Did you read about that? No, you didn't. You don't know what the fuck you're talking about. You guys had two choices. You had two choices. Don't reverse split, don't raise cash, and watch the company go into bankruptcy because they were strapped. Or, as I told you would happen, the reverse split would be approved through that whole court case. We talked about it for months. I said I was 99.9% sure the company was going to get its way. And some of y'all argued with me, and you made your choice to do nothing because you listened to idiots that said they were going to win in court with their little frivolous lawsuits. And now you're down 99%. Meanwhile, some of us did our own DD, looked at the legal arguments, realized that the balance sheet said the company needed and was going to raise money. And we made some last minute moves to not lose our entire portfolio. Most of us now have far more shares than we did at the end of last year and at the current price or lower than the current price. So you guys got to choose who you're listening to. $14 minutes. 14 minutes. Blue Sky, what's up? He says 2024 is supposed to be worse than 2023 at the box office. I don't know. I mean, did you listen to the IMAX call yesterday, Blue Sky? He said 2 months ago, the CEO of IMAX said he was really worried about 2024. He said now, today, he thinks it could be an okay year. In 2025, he called it a dream year. Q1, yeah, Q1 right now sucks. We got 5 weekends left in Q1. We got Dune projected to do up to 175 million globally on opening weekend. I had said that I'd be happy if Dune 2 did $200 million. And we're already at 175 million globally on opening weekend. So I'm not going to tell you like some that I think it'll do $1 billion in March, but it's going to exceed my somewhat conservative forecast. I can already see that now. So yeah, we need a big March. We need to bank some numbers in March. Q1, I have a feeling right now that it's going to suck, but and probably suck worse than Q4, the one we just got done with. And I've been telling you guys that for a while. Q4 and Q1 are going to suck, but we have a shot. I mean, there's a one path on the multi-path universe where March could be a good month. We will all watch it together in the next 5 weekends. And I certainly hope that Dune 2 exceeds everybody's expectations. Steve Raven says, am I blocked? No, sir. I see you. Let me switch my chat instead of top chat to live chat so I can make sure and see all of your comments, everybody's. Chris O'Connor, good question. Is Trump getting an is Trump becoming our next president going to be a potential element in this play? I think in terms of general market dynamics, I'm not looking at it in terms of AMC. In terms of general market dynamics, I think Trump getting elected could be a boon for the stock market. That's my current view. Slot Massacre is expecting 900 million for March. That would be beautiful. There are several good movies in March. We got Dune 2. We've got Kung Fu Panda for the kiddos. And we got Godzilla Kong movie, but that unfortunately doesn't start until the end of the month. And what else do we got? I was just looking at this the other day. Dune 2. I think that was about it that I saw that was a big, wide release. I'm just scrolling through the list here. Arthur the King with Mark Wahlberg. I don't know anything about that movie. It's Mark Wahlberg and a dog. Yeah, every little bit helps, but I'm looking for what are the blockbuster. Just not a lot in March, except Dune 2, Kung Fu Panda. Even though it's number 4, it'll bring in something for the kiddos. We got a Disney movie, Luca, March 22nd. Ghostbusters, March 22nd. I don't know. I haven't watched a preview for that one. I'm scared to. After the last Ghostbusters, what a fucking train wreck that was. You know, the one with the ladies. We got a horror movie, goody, Immaculate, with Sydney Sweeney. Why is Sydney Sweeney in everything all of a sudden? I mean, I'm not complaining, but she's got another movie. That lady's been working. What is this? Winnie the Pooh, Blood and Honey, horror thriller. Blood and Honey 2. Did anybody see Winnie the Pooh, Blood and Honey 1? What the heck is this even? Oh my gosh. Yeah, the Bob Marley movie's been racking up steady good numbers. Go see that one if you haven't. If your Dune Part 2 is sold out, go see Bob Marley. Wait a week and go try again. Candace says she saw Blood and Honey 1 and it was not that good. Daddy Warbuck says the new Ghostbusters are awesome. All right, I'll make a commitment to go watch the trailer. I've been kind of nervous about it, and I've really got turned off of that franchise because I loved the original so bad and they fucked up the last one. I didn't even go see the damn movie. I saw the trailer and I was like, hell no. You guys know, I see a lot of movies, but I have a little bit of, what's the word? Integrity in what I force myself to go see. I'll be damned if I'm going to go see them ruin one of my favorite movies. Sean Teo says, my fear is for Godzilla Kong to pull a surprise flop of the year. Let's see if we... I thought that the buzz on it has been good. Godzilla Kong. Let's see if we got any news here. 7 minutes to the call. Yeah, not a whole lot of buzz that I can find just on the fly here on that movie. CH said, why did the price go down before earnings? Because the price had been run up. Really that simple. Typical pre-earnings run up, and you gotta deliver a beat to drive the price up, and the numbers came in on earnings per share a little bit worse than estimates. The revenue was right on target. The earnings per share was a little light. How can they change that on this call? With guidance. What the executives say in the call that we're all about to listen to together can change the dynamic from where we're at to the positive or negative. Mr. Palma says, what could the AMC execs possibly say that make AMC feel like the hard times are over? Any version of what IMAX's CEO said yesterday. If I had a dream, they would come at it with the same energy and enthusiasm and positive outlook that the IMAX CEO had. Now, I listened to Cinemark. It was okay. They were not, they just said, hey, look, 2024 is going to be the same as 2023. We're excited that the growth curve will continue back up starting in 2025. That's Cinemark's call in a nutshell. IMAX, on the other hand, he said, 2 months ago, I was worried about 2024. That is changing today as I'm looking at the updated roster of movies and the amount of people, the pre-sales we're having on Dune 2. And he called 2025 a dream year. You know, if you get that kind of talk from AMC emulating the IMAX CEO, the market's going to pay attention to that. So I would rather, you know, I'll take a tepid call a la Cinemark. I'd love a IMAX type call. And I pray that he doesn't do no negative bullshit. Stinking Rocket says, why isn't Adam Aaron laying off a few people to cut costs? What I've noticed in my area, Stinking Rocket, in my area here in Texas, is what they've been doing during the week is they cut out all, in Q1, they cut out all early and midday shows. I can't go see a movie before 4 or 5 o'clock in my city at 3 AMCs. And I often, if I was done trading or it was a slow day or just an all red day, I'll go see a movie at noon so I can be back in time for market close. I can't do that right now. So hopefully they are replicating that across the country, because this is kind of a light quarter, January and February, and that is a major savings on wages of the hourly employees. You don't want to have 10 people staffing up a theater while 5 people are coming to watch movies in the middle of the day. As far as corporate layoffs, I don't even know how big their corporate structure is. I don't know. I don't know if they're operating lean or if they have fat that they could trim. It's a good question, but since I don't know how they're structured, I can't say. But in my experience, because I was in corporate world for 15 years, every time we knew we were about to enter a down phase, they'd chop 10%. 10% of every department. Just brutal, no emotion. Chop now, ask questions later. So that's what I'm used to. I get it, where you're coming from. It's a valid question. Why aren't they cost cutting middle management? I don't know. It's a valid question. The only thing I could say is either they don't care or they're already so lean that there's nothing they can cut. I don't know the answer. All right, let me see if I can get queued up in the call here. And I bet we have music. Yep. Brian Hunn, thank you for the super chat there. Brian says, was Adam Aron one of the highest paid CEOs of all CEOs? I put out a couple tweets yesterday on compensation, Brian, and I think that you're in the ballpark. I need to run a list of the highest paid CEOs for 2022. We don't have the 2023 final numbers yet, but we should know them soon. I'm waiting for the music to stop. We should know the 2023.
Was one of the highest paid course of all course.
We should know the 2023 final numbers soon, but his total compensation consists of $1.5 million in salary. It was about $6 million in executive cash bonus and $16 million in awarded shares. That puts him up there, especially relative to his peers. Let's see if we got the call going here.
Capital Markets and Investor Relations.
Here we go.
Thank you. You may begin.
Thank you, Diego. Good afternoon. I'd like to welcome everyone to AMC's fourth quarter and full year 2023 earnings webcast. With me this afternoon is Adam Aron, our Chairman and CEO, and Sean Goodman, our Chief Financial Officer. Before I turn the webcast over to Adam, let me remind everyone that some of the comments made by management during this webcast may contain forward-looking statements that are based on management's current expectations. Numerous risks, uncertainties, and other factors may cause actual results to differ materially from those that might be expressed today. Many of these risks and uncertainties are discussed in our most recent public filings, including our most recently filed 10-K and 10-Q. Several of the factors that will determine the company's future results are beyond the ability of the company to control or predict. In light of the uncertainties inherent in any forward-looking statements, listeners are cautioned against relying on these statements. The company undertakes no obligation to revise or update any forward-looking statements, whether as a result of new information or future events. On this webcast, we may reference non-GAAP financial measures such as adjusted EBITDA, constant currency, free cash flow, non-GAAP operating cash burn, and operating cash generated, among others. For a full reconciliation of our non-GAAP measures to GAAP results, please see our earnings release posted in the Investor Relations section of our website earlier this afternoon. After our prepared remarks, there will be a question and answer session. This afternoon's webcast is being recorded, and a replay will be available in the Investor Relations section of our website at amctheaters.com later today. With that, I'll turn the call over to Adam.
Thank you, John. Good afternoon, and thank you, everyone, for joining us today. 2023 marked another year of strong operational and financial gains for AMC Entertainment, affirming the success of our strategic recovery efforts as the industry continues to rebound from the lingering effects of the pandemic. Our determination, innovation, and agility allowed us to adapt to a rapidly changing and unpredictable box office in calendar year 2023. And once again, it allowed AMC to defy Wall Street's expectations, beating FactSet and Refinitiv consensus estimates in Q4 and for full year 2023 for revenue, adjusted EBITDA, adjusted net income, and adjusted earnings per share. As a result of our actions, global attendance at AMC Theaters in 2023 tallied nearly 240 million guests, up 19% over the prior year, and marking the highest annual attendance in the post-pandemic era for AMC. When you couple our 2023 attendance growth with our all-time record-setting admissions revenue and our all-time record-setting food and beverage revenues per patron, AMC's annual revenues grew by 23%, exceeding $4.8 billion in 2023, and our adjusted EBITDA improved by $379 million to $426 million in 2023. It was the highest level for adjusted EBITDA in 4 years, the highest revenues for AMC in 4 years, and in fact, our adjusted EBITDA was up more than 9 times what it was just a year earlier in calendar year 2022. Unquestionably, our positive recovery trajectory continued in 2023. Not enough for where we hope to eventually wind up in the year ahead or the years ahead, but encouraging progress again was made. We're also proud that when you look at the magnitude of our revenue and adjusted EBITDA increases, AMC is outshining several of our largest and most important key competitors in the U.S. and in Europe. One of AMC's most essential accomplishments, which may not be widely understood, is just how efficient we have become after having to adapt to pandemic stresses these past 4 years. Thanks to AMC's increased high-margin food, beverage, and merchandise sales, rising ticket prices, our industry-leading premium large format capacity, a commitment to laser projection, pruning our network of some marginal theaters and replacing them with some clear winners, and of course, holding the line on costs. AMC's internal analysis reveals to us that our contribution per patron is up by some 37% versus what it was before the pandemic. This means that AMC does not need for the industry box office to return completely to pre-pandemic levels for AMC's adjusted EBITDA to dramatically outstrip what we generated historically. Speaking of the box office, let's turn to the domestic industry box office as a placeholder for the size of our industry and to demonstrate our industry's long climb back from COVID. We all know that the box office fell from $11.4 billion in 2019 to $2.2 billion in the height of the pandemic, calendar year 2020. But then the domestic industry box office started on its rebound, up to $4.5 billion in 2021, to $7.5 billion in 2022, and it grew again in 2023 by 21% to more than $9 billion in the year just completed. That is an upward slope for sure. Again, it's not enough, but again, progress has been made. And in looking at the fourth quarter of 2023 in particular, what is particularly noteworthy about the box office is how our company, AMC Entertainment, reshaped the box office and how much AMC benefited from our trailblazing industry-leading efforts with our highly successful distribution of two concert movies, Taylor Swift, The Eras Tour, and Renaissance, a film by Beyonce. In the fourth quarter, compared to the same quarter a year ago, AMC's revenue grew by 11.5%, and AMC's adjusted EBITDA almost tripled. Literally, all of that increase in AMC's revenue and all of that increase in AMC's adjusted EBITDA is attributable to our having shown these two concert movies in our theaters in the U.S. and internationally. They also caused AMC's U.S. market share to noticeably rise. That's because our share on these two concert films, the two that we not only exhibited but also were the distributor for, were well more than 50% higher than our market share normally. If that's not enough, both of these two movies played to rave critical acclaim. Each received a rare A+ cinema score, and the Rotten Tomatoes response was astronomical, with Taylor's film scoring a 99.98 and Beyonce's film scoring a 97.99. With some $213 million in domestic ticket sales within Q4, these two movies added greatly, not only to AMC's bottom line, but to movie theater success across our entire industry, as just these two films represented fully 1/9 of the complete fourth quarter domestic industry-wide box office, 1/9 from our two movies. Taylor's movie in particular was the single highest grossing movie of them all within the fourth quarter at the domestic box office. And worldwide, at $275 million of gross, Taylor's film also was the highest grossing concert film of all time and the highest grossing documentary of all time. It's hard to believe, but it's true. Only Universal and Warner significantly outgrossed AMC Theaters distribution domestically in the fourth quarter of 2023. With just these two movies, AMC Theaters distribution had a domestic box office gross during the months of October, November, and December of 23 that was only 1.6% less than that of industry behemoth Disney. And our two films domestically outgrossed all of what was offered theatrically in the quarter by Paramount, by Sony, by Lionsgate, or by any of the other smaller movie makers. This is a stunning result, given that neither of these films were on anyone's drawing board until mid-year, and that they were the first movies ever distributed by AMC in our entire 103-year history. What a triumph for our company. To that end, it is no surprise then that our praise for Taylor Swift and for Beyonce Knowles Carter has no limit. And you will surely understand why we offer our boundless thanks to these two world-class artists for entrusting AMC to collaborate with them as to the theatrical exhibition of their two masterpiece creations. I should add that I've said before that our phones have been ringing off the hook, and I can confirm to you today that we are now in constant touch with others who are seeking to have AMC also distribute the movies of more world-class musical artists for later in 2024 and or 2025. This blending of great musicians and movie theaters is an innovation for AMC that should and will continue into the future. But make no mistake about it, as pleased as we are with the movies that we distributed, or as pleased as we are with our entire results for the entire year of 2023, 2023 did not live up to its full potential. That's because the many months of actors and writers' strikes crippled Hollywood, and they seriously hurt movie theater operators who have been forced to wait for delayed movie titles that shifted out of 2023 into future time periods. After 3 years of hard work by one and all, after theaters were closed back in 2020, the domestic industry-wide box office finally was in sight of pre-pandemic levels back in the summer of 2023. At the peak of the summer of 23, the July 23 domestic box office was actually up 6% above July of 2019, the last July pre-pandemic. And in that summer quarter of 2023, AMC generated the highest third quarter adjusted EBITDA ever. Clearly, moviegoers flock to theaters when Hollywood releases films in quantity and in quality. Just think, Barbie and Oppenheimer. Or for that matter, think of what came out of Leawood, Kansas, Taylor Swift, the Eras Tour, among others. But the strike of 23 clearly interrupted that momentum that was pushing us to above pandemic norms in the middle of last year. The strikes in Hollywood led to the fourth quarter domestic industry-wide box office being down 35% versus pre-pandemic 2019. The January-February 2024 domestic industry-wide box office was down about 45% versus the same months of pre-pandemic 2020. We point this out not to alarm you or to whine about it, but instead because we want everyone to realize that by the middle of 23, we had finally emerged from the cloud of the pandemic. But then the strike hit and sent us back into the soup. However, at AMC, we believe that the strike impacts will only be short-term in nature. AMC believes that the box office will start to strengthen again as soon as this coming month of March, in some of the summer months of 2024, and especially in the latter third of this year. And over the medium term, we are both bullish and optimistic. With all the caveats that no one's crystal ball is perfect, at AMC, we currently believe that the industry box office in 2025 will be robust. We believe it will grow by $1 billion to $2 billion or more in size over what will be the box office in 2024. With that as an introduction to our results for the quarter and the year, I'll now pass the webcast over to Sean, our Chief Financial Officer, to provide more details on our quarterly and full-year financial results, and especially to share with you the progress that AMC has made in reducing our debt and in bolstering our cash reserves. After that, I'll return to provide you with my further take on where we are at the moment as a company and share some other news that may be of interest. Sean?
Thanks, Adam, and thank you to everyone for joining us this afternoon. I'd like to start my prepared remarks by briefly looking back over the last 4 years. No doubt our business has experienced challenges like never before. First, we had the COVID pandemic. then the Hollywood strikes, and all this while we managed through supply chain challenges and interest rate increases that have just put enormous pressure on our cash flows. Yet today, our business is remarkably well positioned to thrive as the box office recovers towards pre-pandemic levels. Over the last 4 years, we've improved our per-patron revenue and per-patron profit quite considerably. In 2023, our consolidated per-patron revenue was around 32% higher than in pre-pandemic 2019. This was driven primarily by growth in food and beverage spend per patron of 45.7%. And we've also increased our contribution dollars per patron. Contribution dollars here defined as total revenue less both film exhibition costs and food and beverage costs. And we lessened this by approximately 37%. So we've increased these contribution dollars per patron by approximately 37%. At the same time, we've worked hard to enhance our theater portfolio. We've been closing underperforming theaters and opportunistically opening higher-performing theater locations. As an illustration of the impact of the changes that we have made in our business, consider for a moment the following. In 2023, our domestic attendance was 32.3% less than in 2019. At the same time, we were able to keep revenue per screen flat in 2019 and increase our contribution dollars per screen by approximately 4.3%. So with 32% lower attendance, our contribution dollars per screen actually increased by 4.3%.
Which means when box office goes up, we are set,
The consolidated
baby.
statistics I've quoted are in constant currency and help explain why we believe that A, the box office does not need to get all the way back to pre-pandemic levels for us to achieve pre-pandemic adjusted EBITDA. And B, at pre-pandemic box office levels, we should be able to achieve higher adjusted EBITDA than we were able to before the pandemic. And finally, looking back over the last 4 years, we have very actively worked to strengthen our balance sheet by reducing debt and increasing liquidity. It's worth noting that the total principal amount of our corporate borrowings and finance leases at December 31, 2023 was $4.56 billion. This is approximately $451 million lower than 4 years ago at December 31, 2019. And our net debt at December 31, 2023, net debt defined as total corporate borrowings and finance leases less available cash. This number was nearly $1.1 billion lower than 4 years ago at December 31, 2019, prior to the devastating impact of COVID on our industry. At the same time, it's also worth noting that given pressure from a rising interest rate environment and our heightened leverage ratios due to the box office being still well below pre-pandemic levels, our interest expense during 2023 was approximately $70 million higher than in 2019. Now to the results for 2023. AMC generated more than $4.8 billion in consolidated revenue for the year, marking a solid 23% increase compared to 2022. Likewise, adjusted EBITDA increased more than ninefold compared to 2022 to $426 million. And for the first time since 2019, we achieved positive adjusted EBITDA in all 4 quarters of the year. Now, looking specifically at the fourth quarter of 2023 compared to last year, the North American box office grew by nearly 5%, with Taylor Swift's The Eras Tour, distributed by AMC, leading the way. With market share gains, in part from the success of The Eras Tour, and very strong food and beverage per patron growth, our fourth quarter consolidated revenue increased by 11.5% to $1.1 billion. Domestic revenue in Q4 increased by 12.9% as a result of record-setting admissions revenue per patron of $12.83, This is 5% higher than a year ago, and record food and beverage revenue per patron of $8.31. This is an increase of 7.1% compared to 2022. It should also be noted that other revenue grew in total by approximately 32%, and this driven by distribution fees associated with the concert movies, together with increases in retail popcorn sales and sales of movie-themed and AMC-branded merchandise. In our international business, competitive dynamics limited our ability to take price increases without adversely impacting market share. Attendance in the quarter increased by 3.9%, and on a constant currency basis, revenue increased by 2.5%, with admissions revenue per patron decreasing by 1.4% to $9.27, and food and beverage revenue per patron growing slightly to $4.38. Other revenue was in line with last year's fourth quarter. Now moving to cash flow and the balance sheet. We ended the quarter with cash and cash equivalents of $884.3 million. For the full year, non-GAAP operating cash generated, which is a measure representing cash flow from operations after deducting capital expenditures and before both debt servicing costs and deferred rent payback. This was a positive $68.3 million, a $362 million improvement compared to last year. For the fourth quarter, non-GAAP operating cash burn was less than $1 million. Capex, net of landlord contributions, was $64.2 million in the fourth quarter, bringing the year-to-date net capex spend to $201.7 million, right at the midpoint of our 2023 net capex guidance. We expect net capex in 2024 to be in the range of $175 to $225 million. From a theater perspective, we continue to actively manage our footprint, and during the fourth quarter, we added 2 new high-performing theaters and closed 9 underperforming locations. This brings the total number of locations closed since the pandemic began to 165, and the total new locations opened to 59, for a net reduction of 106 locations, or 10.6% of the locations at December 31st, 2019. Going forward, as we continue to rationalize the theater portfolio, we will also continue to invest in our circuits to enhance the guest experience. To ensure our ongoing recovery and ability to thrive as our industry grows, our top 2 capital allocation priorities must remain the same. 1, we must ensure that we have sufficient liquidity to manage through this recovery phase, including the impact of last year's Hollywood strikes. And 2, we must strengthen our balance sheet by extending debt maturities and improving our financial leverage, thereby reducing our debt servicing costs. During the fourth quarter, we successfully raised $350 million of gross equity capital. We then repurchased $50 million of debt at an average discount of 20%. We exchanged $105 million of debt for roughly 14.2 million shares of common stock, and we repaid $17.9 million of deferred rent. The deferred rent balance at the end of 2023 was $56.3 million, and we plan to reduce this balance by another approximately $20 million by the end of 2024. Overall, since the beginning of 2023, we have raised $865 million of gross equity capital. We've lowered the principal value of our debt and finance leases by $466 million. We did this through debt repurchases or exchanges of debt for equity, and we have repaid $101 million of deferred rent. This all for a total reduction of debt and deferred rent of $567 million. The debt reduction since the beginning of 2023 has lowered our future annual cash interest expense by approximately $44 million. All told, as of today, we have reduced our debt and deferred rent liabilities by approximately $958 million since the beginning of 2022, so over the last 2 years. Having the flexibility to raise equity capital has been critical for our survival, and it has allowed us to seize opportunities to strengthen our balance sheet and build a foundation from which to thrive as the film exhibition industry recovers. Capital markets actions that we took during 2023 have positioned us to face with confidence the probability of a relatively weak near-term box office, especially during the first half of 2024. While the box office for the first half of the year will likely underperform last year, we are increasingly optimistic about the outlook for the latter half of 2024, and the film slate for 2025 looks incredibly exciting. And now I'll hand the webcast back over to Adam.
Thank you, Sean. As I said earlier, and as our financial results prove, 2023 was clearly another year of recovery and improved performance for AMC. But it was not a good year for our shareholders. Adjusted for stock splits, the AMC share price has fallen to a fraction of where it was as recently as last summer. And I promised our shareholders that I would use this earnings webcast as a forum to provide them with some straight talk, to give them my take. So here's my take. There is so much garbage information floating around Twitter, YouTube, and other corners of the internet about AMC. Conspiracy theories abound, facts are distorted, bad motives are assumed when the exact opposite is true.
It's 20 emotional dipshits in the Popcorn Project, Adam. Just 20 of them.
So you get the straight scoop. I can't address all of those issues in the limited amount of time that we have, but I do want to address some of the most important. First, as to all the hubbub and litigation that surrounded AMC in the Delaware courts in 2023, I want to remind you that our shareholders got the right to vote on our proposed actions. And not only did the preferred shareholders vote in favor of what we did last year, but also of the common shareholders who voted, their count also was in the affirmative by a wide 72 to 28 margin. Then the Delaware courts ruled that the company could settle the litigation surrounding those shareholder votes and proceed to implement exactly as our shareholders voted. Second, as to dilution, back in the summer of 2021, a long time ago, after it was clear that shareholder sentiment was not wholly supportive of more equity sales, we said there would be no more in 2021, and we kept our word. Some critics, assigning us bad motives, were convinced that we would start more equity sales in the very first week of 2022, since the commitment we made only incorporated 2021. But they were wrong. We sat on the sidelines for almost 8 months in 2022. But by August of 2022, we did in fact introduce into the market AMC preferred equity units because, among other reasons, we wish to make it possible for AMC to raise more cash through the sale of shares if we thought it was advisable or if we needed to do so. We were very clear about this in our public disclosures at the time. Between August of 2022 and June 30 of 2023, AMC raised $418 million by selling what were called APEs. AMC's cash position at that end of June 2023 was $435 million. $418 million raised, $435 million of cash. Do the math. Had we not sold those shares,
mic drop right here.
$18 million from $435 million. Big companies, the size and scope of AMC Entertainment, cannot survive with only $17 million.
I can hear the crybabies right now. He's lying.
Similarly,
I did the math.
In the full year of calendar year 2023, AMC raised $865 million of cash through the sale of apes and the sale of common stock. We ended the year with $884 million of cash. $865 million raised, $884 million of year-ending cash. Again, do the math. Had we not sold that equity, deduct $865 million from $884 million. Big companies, the size and scope of AMC, cannot survive with only $19 million of cash on hand. We did, in dilution, what was absolutely vital for your company to do to get through the many challenges that have been thrown our way. The absolute smartest way for AMC first to survive and then eventually to be in a position to thrive is to have robust cash reserves. Period. Plain and simple. There can be no argument. Cash is king. Third, from time to time, there have been matters related to the trading of AMC stock that have been of concern to some of our shareholders. As but three examples, the absolute number of failed-to-deliver shares, synthetic shares, or the length of time AMC Entertainment was on the threshold list, among others. We dutifully have kept the New York Stock Exchange and appropriate regulatory bodies well informed, and we make frequent public filings. But here is a key reminder and clarification. AMC is a company that is listed on the New York Stock Exchange, but we are not the stock exchange itself. Frankly, we have no ability to regulate or enforce trading practices on the stock exchange. And as much as some of you may wish it to be otherwise, our business is the exhibiting of movies in theaters. We are not in the business of reforming the financial markets overall. Then, as to our motives, it's disappointing how many people out there type into their Twitter feeds that the management team at AMC is somehow actively working against the interests of our retail shareholders and instead is nefariously on the side of evil, the so-called hedgies. A company that does not post the kind of improving financial results as AMC just did today, if one is out to sabotage one's owners. One does not sell $54 million of movie-themed merchandise in our theaters and online, as AMC did in 2023, versus virtually no sales of such items only a few years ago, if their motives are impure. And I should point out, by the way, that selling merchandise was an idea that came in from our retail shareholders, by the way. Similarly, one doesn't launch popcorn to the home or blaze new trails with innovative concert movies that have been incredibly profitable and reputationally enhancing for AMC if one is trying to undermine our company's success. So given all that, then why has our share price been falling? Are those conspiracy theories right? There are many, many complicated factors that affect any share price. Some well understood, some not so well understood. But my own view is pretty basic and overarching. It is this. It has taken way too long for the entire movie theater industry, including AMC, to recover in attendance or to recover financially from the impact of COVID. Also bad, just as adjusted EBITDA in the summer of 2023 was returning to more acceptable pre-COVID levels, no one needed for the movie industry to be paralyzed by debilitating strikes, which will temporarily challenge AMC earnings in 2024. We believe there are numerous other reasons too, like rising interest rates and inflationary wage and cost pressures, among many others. But in my mind, the key issues are, first, the long, drawn-out recovery, and then the strikes of 2023, combined with the steps we've been forced to take to wade through 4+ years of a depressed box office. These are the issues that have pressured AMC share price. So let's cut to the chase. Looking ahead, is there hope? As I stated earlier, the box office should start to strengthen beginning as soon as March, a month that starts a mere 2 days from now. It should further pick up later in 2024, and the box office for 2025 could be very favorable, as movies that might have been
from the
released
talking
sooner
points that I sent
finally get released in 2025. So yes, in my view, there's good reason to be optimistic. That optimism notwithstanding, AMC must continue to address our debt load, extend our debt maturities, currently mostly in 2026, and push them out into later years, and also to ensure that our cash reserves remain robust. That is the recipe for success. Remember what I said earlier on this call. Cash is king. At AMC, our strategy is sound. Run the best company we can. Please our guests at theaters and serve them well. Prudently innovate. Drive the most earnings we can. Reduce debt, extend debt maturities, and have the cash reserves on hand to outlast the tough times. Doing all that, which is what AMC has been doing so well over these past several years, is what makes me optimistic and confident about the future. Because as the clear leader of the movie theater industry, and the clear leader by a wide margin, AMC is doing all the right things. There's one more topic that I want to raise before we turn to your questions. And that is our interests, meaning the interests of our shareholders, and my interests as CEO of the company and as a shareholder myself are perfectly aligned. I personally am AMC's largest retail shareholder. So, as your shares rise in value, so do mine rise. As your shares fall in value, so do mine fall. In the last 6 months, as the AMC share price has dropped, I personally have lost tens of millions of dollars in the value of my AMC shareholdings and in my granted but unvested stock. I assure you that focuses the mind. In my stock losses, I share in your frustration, I feel your pain, and I'm heavily incentivized to get the value of your AMC shares back on the right track. In the past 2+ years, I have been a holder of AMC stock, not a seller. Indeed,
that's a fact.
I have not sold a single AMC share since January of 2022.
That's a fact.
While I have forfeited granted shares on the same day as they vest to pay the federal and state income tax withholdings that are immediately due upon that vesting, I have not sold even one share in the marketplace, not one share in the last 25 months.
Tell us you're not selling for another
often on Twitter
12 months.
That I ride with you. I am a shareholder. I am holding. I'm not selling. I ride with you. So when you get well financially with AMC, I will too. But if you're hurting from that investment, I believe that I too should be hurting with you as well. Therefore, to prove that these words are not hollow and to show executive leadership from someone who is in your foxhole, I want you to know that I recommended last week to the AMC Board of Directors that for the next 12 months, starting right now, my target compensation should be substantially reduced.
Yeah! You guys got what you wanted.
Compensation can be at the target, below the target, or above the target based on the company's financial results. The board and I agreed that my target compensation will go down right now as we move forward by 25% versus the previous year's target. And maybe even more relevance, if you compare my new lowered target compensation against my actual compensation for the past year, as most recently publicly reported, that's actually a 50% reduction in my potential compensation in the year ahead.
And on top of that, what he's holding has been decimated.
There's no anguish in my voice about that. That is what a CEO of a company like yours should do, because I mean it when I say that I ride with you.
Adam, Aaron, I ride with you.
You now know what I think. 2023 was a year of superb achievement and innovation at AMC. Unfortunately, AMC starts out 24 with $884 million of cash. Cash is king. I've said it multiple times, and that is the guiding philosophy that has caused this company to stay in a leadership posture no matter what the world threw at us starting at 2020 and since. While the box office took a 5-month downturn starting in October of 2023 because of the long strikes in Hollywood, things will pick up considerably soon, and then again later in 2024. And 2025, which in the grand scheme of things is right around the corner, could be a gangbusters year, both for our industry and for AMC as a company. We are in this together, you and I, and here's hoping that we all are smiling as we head in the next year. With that, Sean, let's move to questions from analysts and from our shareholders.
Thank you. Ladies and gentlemen, at this time we'll conduct our question and answer session. If you would like to ask a question, please press *1 on your telephone keypad. A confirmation tone will indicate that your line is in the question queue. You may press *2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment while we pull for questions. And our first question comes from Eric Wold with B. Riley Securities. Please state your question.
Eric has a $12 price target on AMC.
Adam,
see what he says.
I want to go back to kind of one of the parts of the business that's, I think probably not as talked about, but the distribution business. I think, one of the knocks on the overall exhibition business in general for years has been that, the availability of content, was largely out of control. So when you get things like, the pandemic or strike, there's little that you can do to kind of drive content into your theaters. Obviously, this changes somewhat with what you did with Taylor Swift and Beyonce. I guess as you continue to build out that business, I know you talked about you're in discussion with other artists for releases later this year or the next year. I guess any sense of what you think the annual opportunity could be for revenue and EBITDA from that distribution business? And then, what do you think is the ability of AMC to kind of move outside of the concert or kind of musical film genre into other genres that may be, more direct competition with some of the other larger distributors out there?
Well, Eric, look, you're entirely right that if you look at the single biggest challenge that our industry has faced since the reopening of theaters at the end of 2020, it's in the lack of content. And we took matters into our own hands in 2023 with Taylor and Beyonce and had 2 grand successes. That causes us to want to do more. We certainly got the attention of the best musical artists in the world. And so there will be more of those. I don't want to quantify it. I've got a good sense of it, but I don't want to quantify it quite yet. Let's land some contracts for future concert films, and then we'll have a better sense of what you can count on reliably. But who knows where this will lead? There's other alternate content that we could focus on other than just concert movies. We could look to comedy, we could look to sports. When you think about the movie theater industry, it's a dirty little secret that the industry only sells about 15% of our tickets. I used to work in the airline industry. We sold like 75% of our tickets, not 15. There has to be ways to create alternate content that will not replace what Hollywood's doing, but will augment what Hollywood is doing by filling some of those empty seats that are just sitting there waiting to be filled. It also does sort of cause us to think, what other ways can we generate movie content in our theaters inexpensively? I don't think you'll ever find a situation, where AMC is writing a check for $50 million or $100 million or $200 million to make movies. But there are some interesting ways to collaborate with movie makers, to take movies that might not otherwise get made and get them into our theaters and into some other theaters of our friends in the industry, both in the U.S. and abroad. So this whole notion of how do we increase content is something that's completely in our wheelhouse, and it's a direct result of our success in what we've tried to do in the fourth quarter and succeeded with Taylor and with Beyonce.
Thanks, Adam. Appreciate that.
Thank you. I'll now hand the floor back over to. I'll now hand the floor back over to Adam Aaron to take some retail shareholder questions. Thank you.
We'll take it, Diego. We have had retail shareholders send questions in. Sean, what do they want to hear about?
Yeah, sure, Adam. So the first question is generally about the industry recovery, which we've certainly been talking about a lot today. But the question relates to, with players like Amazon and Apple entering this business, is it likely that we can see the release schedule really increasing past pre-pandemic levels in the future?
Well, that's a good question. But before we talk about whether we get beyond pre-pandemic levels, let's talk first about getting to pre-pandemic levels. Because as we sit here today, the movies released by the major studios are down about 25% from the quantity of pre-pandemic releases. The good news here is, as you know well, we talk to every major studio every week of our lives here at this company, and we know that studio after studio after studio sees the opportunity for them that can come from achieving high theatrical grosses. And one studio after another is doing all of its power to increase their release schedules, to get the release schedules first back up to pre-strike levels, and then hopefully even higher levels than that, moving back closer to pre-pandemic levels. Yes, it's true. Apple and Amazon are making movies. They're releasing those movies theatrically. We're working very closely with each company. Happily so. We welcome them to the party. We have enough screens in our company and in our industry to accommodate whatever supply of content all these studios can produce, and then some. I would point out that one of the comments in my prepared remarks, it's so important, is we've done so much in the past 4 years to make this company more efficient. Our profit per patron is up 37% from where it was when we entered the pandemic, which means we don't actually need the box office to come all the way back to pre-pandemic levels. We don't need attendance to come all the way back to pre-pandemic levels. because we're making so much more profit from each guest who is in our theater. As for whether, in fact, and when the box office does cross that pre-pandemic hurdle and crosses $11 billion, we'll all find out together.
Great. There's related to that, there's some questions about diversification and what revenue diversification opportunities exist to grow and enhance our business.
So I don't think anyone's worked harder at diversifying their revenue streams in our industry than AMC has in the past few years. And some of them have been quite high profile. Things like giving Orville Redenbacher some competition on the shelves at Walmart with our popcorn lines that we took to the home, which is selling extremely well at Walmart. And we just literally in these very months are in the process of having extended our retail presence to Kroger and to Publix. We also went up on the Amazon Marketplace. So that's an example of diversifying our revenues.
When is the candy going in the Amazon Marketplace?
We launched our candy line, I guess it was in December, I think, at our theaters. I've tweeted publicly about maybe coming up with a house wine or house beer. Beyond that, though, I think the single biggest, most successful diversification play we've had so far is what we've done with movie-themed merchandise. As I said in the prepared remarks, we sold $54 million of it in 2023.
I finally hear a number.
Nothing.
That's the first number I've heard on merch.
We continue to be intrigued by diversification, and there are other diversification opportunities, but I think it's really important to say this. We worked very hard to bring all that cash into our bank accounts, as you know. And 2024 could be a challenging year, especially early in the year. We need to husband all of that cash and treat that cash as being very precious because it's the thing which assures our survival going forward. Therefore, if we're going to look for diversification plays, we have to do so in a capital-light way. We have to be able to diversify, spending very little money to do so, because the smartest thing we can do with our cash right now is keep it for a rainy day.
Questions here on loyalty programs. There's quite a few questions on the loyalty programs. And people are asking if there's an update to the loyalty programs coming, any ideas such as bringing a friend along for A-list members in exchange for a fee perhaps, or a family plan for A-list, or other new creations for our loyalty programs.
There are a lot of ideas about our loyalty programs. Our marketing department right now is in the process of testing some things we've given a lot of thought to. A-list is of great appeal to us, of course. It's been a very successful program for our company. The most important marketing program this company has ever had is our Stubs frequent moviegoer program. And there are a lot of interesting things that we might be able to do to make Stubs appeal to more people and to cause people who are Stubs members to attend more movies. There are interesting things afoot about how might one qualify for Premiere, as an example. There are other possibilities of, we have 3 tiers in the Stubs program right now: the free insider tier, the paid Premiere tier, and the A-list tier. There's talk of creating a 4th tier of Stubs, somewhat in between the Premiere level and the insider level, with new benefits. We're going to test right now, research and test right now for a possible rollout later this year. And then there's a program near and dear to my heart, which is a loyalty program of another sort. It's called AMC Investor Connect. We have over 1 million members of AMC Investor Connect. These are our shareholders who've registered with us and told us that they're interested in our company. They're either current or former shareholders. We've been in frequent communication with them. We've had lots of advanced screenings for them. We've given them some free this and that, some free popcorns and some free drinks and other things. One of the things that we will definitely be doing in 2024 is reinvigorating AMC Investor Connect, adding more benefits to it, because we know how loyal and those AMC Investor Connect members are to AMC. We want to thank them for their loyalty and encourage them to visit our theaters over and over again. Those are just some of the things we're working on, but watch this space. I might add that, I think one of AMC's greatest strengths over the past decade has been, I think we've been the preeminent consumer marketer in our industry. Just think about the Nicole Kidman campaign, for example, that took on like a cult-like nature. It really hit into the American zeitgeist. And one of the things that I think is fun about that is if you go to an AMC movie, there's something called the pre-show. It's the thing that comes up just before the trailers run and before the movies run. And for the first time in 4 years, starting in a couple of days, we're putting up a new pre-show on the screen. We think it's kind of beautiful and spectacular. We think people will like it. But one of the intriguing little twists is we're moving into phase 2 of the Nicole Kidman campaign. For the last 3 years, we've got a 60-second Nicole commercial, the same one that's appeared over and over before every movie start. And starting March 1, we're going to show 3 different 30-second Nicole Kidman commercials before the movie starts on a rotating basis. You won't get like 3 in a row when you go watch one movie, but as you watch movies going forward, you'll see 3 different Nicole spots that kind of randomly will appear in our theaters prior to the show. We're very good marketers. We use that for the benefit of driving revenues, and as you saw, our revenue growth in calendar 23 and in the fourth quarter of 23, we outpaced just about everybody in our industry.
Something new and exciting for people to see when they come to our movie theaters. I think we've got time just for one more question, which is related to capital expenditure. And the question is, what is sort of the ongoing capex level that we would expect over the next 3 to 5 years? The questioner here notes that pre-pandemic we were spending around $500 million per year on capital expenditure. What should investors expect going forward?
So for the past couple of years, we've been in a landscape of $150 to $200 million of annual capital expenditures. About 150 of that is to what we call maintenance capex, to just keep our theaters in good shape. You can't run a movie theater with a leaky roof, or an air conditioning unit doesn't work, or a projector that doesn't show movies. And then some of that capex has been used for enhancing our IT systems and growth-oriented projects, bring some spot acquisitions. You said we added 59 theaters into our system over the past several years. Some of our capex goes to bring those new theaters into our system. As you look ahead, those years of $500 million capex, those were in the days when we were, renovating, putting in reclining seats and 50, 60, 70 theaters a year. That spurt is way behind us. So I'd say that with one caveat, people should be expecting capex in the $200 million range going forward. And that caveat is this. Because of the tough years that we've had with respect to earnings over the last few years, we've put a tight lid on capital expenditures. It was crucial for us to keep cash in the bank and not necessarily spend it all. There are some obvious growth projects that if we were to raise an additional $50 to $100 million, for example, and we wanted to reinvest that back into our fleet of theaters, if that was something that would produce the highest and best return on that investment, it would have to produce a return on investment higher, for example, than buying back our debt at a substantial discount, which we've done a lot of in the past year or two. There's just some obvious things that are low-hanging fruit where we know the payback would be quick. And the most obvious of them is this. AMC has the largest number of premium large format screens of any movie theater chain in the world, and it's not close. We are 50% of all IMAX screens in the United States, for example. We are 100% of all the Dolby Cinema screens in the United States, for example. And what we've seen is that our premium large format screens command a price in the market that's about 30% higher than the normal so-called 2D auditorium price. They sell out first. The typical seat in a premium large format screen is sold 3 to 4 times more than the typical seat in an auditorium that's not a premium large format screen. And I could easily see us, we have about 600 or so premium large format screens around the world. I could easily see us adding another 150. And we would get a great return from that, but it's not a cheap endeavor. And we'd have to be very careful about how much money we invest and doing it at the right time. So I don't want to say that there's a lid on capex spending of $200 million because there are some low-hanging fruit, no-brainer ideas on how we could further drive profitability if we do have additional capex dollars to spend. Right. So I'm looking at the clock. We're past our hour, so we're going to bring this webcast to an end. I'd like to leave you with the final simple thought. 2023 was a superb year for this company on the march to getting back to pre-COVID levels of profitability. 2024 is going to be a bit harder, but 2024 is going to get a lot better starting tomorrow because Dune opens in all of its glory, and we're expecting it to be a big and successful movie. We hope you all buy tickets, go to the theater, be amused, be entertained. And as we look further beyond just this weekend, and we look ahead to the next year, which is, as I said, right around the corner, we really think 25 is going to be an incredible year for our company, and should be just as 2023 was the best year since COVID. We're thinking 2025 is going to leave 2023 in the dust in terms of how potentially good a year 2025 is going to be. So we're optimistic, we're confident, and we'll see you all at the movies. Thank you for joining us today.
Thank you. This concludes today's conference. All parties may disconnect.
He closed by saying we're optimistic and we're confident. If you had to rate that call on a scale of 1 to 10, with 1 being bearish and 10 being bullish, and taking the totality of that call, how would you rate it? I think I could have used a couple more notches of bullishness. It was not a bearish call. We got 8, 3, 6.5, 10, 10, 6, 7. Yeah, guys, everyone's all over the map. I'm about at a 7. I could have used a couple more points of bullishness. He talked pretty much what I said he was going to say before in the last hour before the call. I told you guys that he was going to say Q1 is likely to be rough, but each quarter of this year is going to get better. In 2025, we expect to be really good. That's my expectation. I think my expectations are pretty well aligned with what Cinemark has been saying, what IMAX has been saying, and now AMC. So you know the roadmap. I still think that 2024 is going to be a year for volatility traders. That's how I'm playing this year. I'm not expecting any massive run-ups in price, at least not in the first couple quarters of this year. We still got to, well, let's see how Dune 2 goes, first of all. We need to see some big numbers in March. If not, Q1 is likely to be a little bit worse than Q4. Maybe it'll surprise me. But I'm keeping my expectations very low for the next couple months into the Q1 earnings call. And then as we see these quarters get better in the second half of this year, moving to 2025, I think you see the sentiment towards this stock begin shifting. So my plan is to take advantage of volatility, sell covered calls on the shares that I have, and just hang out and try and be patient and wait for things to get better. That's my plan. As I didn't hear anything that scared me away from that plan. I will be watching. The cash burn came in respectable. It's not anything that scares me for Q4. Maybe around mid-March, late March, I'll be able to estimate what the Q1 cash burn is based on how Dune performs and what I expect the box office for Q1 to look like. So that is the thing that I'm watching for, the cash burn of Q4 and Q1, to kind of think about what is my estimate for the probability of more dilution. That's what I'm watching. You heard him talk a lot about cash is king. You heard them talk about making sure they have enough cash to pay the bills. I think they got plenty for this year, unless something devastating happens and they blow through $250,000 of cash in one quarter. Then I get a little more worried, but we're not there. I mean, it was very respectable cash burn, kind of what we expected for Q4. Hopefully Q1 will be the same expected cash burn. And then we glide into the end of this year and cross our fingers on no more dilution. I don't have any crystal ball, so that is what I'm looking at to try and get in their minds of how they're thinking. And they're just thinking very black and white. Accounting, finance, look at the numbers. They're planning out 2 years, their cash burn, their balance sheet. And they have a very good idea of what they need to do. And I think that's what they'll be looking at too. The only other thing that I'll add to the dilution and the cash on the balance sheet, and there are people that have said, maybe, Tony, well, they weren't even talking to me. They just said maybe the company might need a little more cash raised to get the debt refinance done. Maybe they do. I don't know. I don't think that they do. That's just my gut feeling. I don't know if I'm right on that. I think they can refinance it just as they are. The industry sentiment is very bullish going into 2025. So I think they'll get a restructuring deal done. And that is one more major hurdle off the table that is keeping this stock price depressed. The concerns over the debt refinancing. So those are the things that I'm looking at to start seeing some real upward momentum in the stock price. Got to get the debt refinancing out of the way. We got to get this bad Q1 out of the way and start getting into some positive news for the industry, positive news in the media. Let's stop all this. Q1 is going to be horrible. Q4 is going to be horrible. We got to get that behind us, and then we build from there. So every quarter I anticipate will be better as we move through this year. But I'm very, I'm just, it is what it is right now. We got to suffer through Q4. That's behind us. We got to get through this one. We're almost there. And then I have very reasonable and sane expectations for some reasonable price movement upward from here. That's where I'm at. No risk of bankruptcy in my mind. No risk of delisting. That's just a bunch of upset people wanting to bring their negative energy onto you because they can't figure out a way to accept their own blame for what, their decisions. I don't deal with all that negative drama. I'm looking at the balance sheet, the income statement, and industry projections. I see the path forward, and I'm good with it. It is what it is. Have the right expectations, have the right timeline, and pray for no cash burn. Pray for a reasonable cash burn in Q1. We might squeeze through this year with no more dilution. But yeah, for the guys that are saying they might need more for a debt restructuring, I don't know. I don't think so. But I acknowledge your concern. No figures on popcorn sales, David is asking. So if you recall, Q2 earnings, you can go look up the transcript or re-listen to the call. In the Q&A session of Q2, Adam Aron said that when popcorn is fully ramped, and it's not fully ramped right now, when it's fully ramped, AMC expects popcorn to contribute $100 million of revenue. Now, I know there are pumpers on Twitter telling you guys it's going to be a $1 billion revenue contributor. That is horseshit. Listen to what the company is telling you. The CEO said with his own mouth, his own words, fully ramped $100 million. We got to get back into reality and listen to what the company's telling you, not what some person on Twitter Spaces is spinning in his little fantasy mind. Merchandise. It was good that we heard $54 million. We got a number now. You can derate that $54 million revenue by the cost of that merchandise. So I don't know what do you think the markup is on merchandise? You think they get to keep half of it? Let's just say half. $25 million AMC got to keep after they pay the cost of the plastic and the licensing fees. I don't know what it is, but let's just say half. $25 million. It's not a ton, but it's $25 million that they didn't have. Like I said, over the last year, every little bit counts. I'm not negging any of these. The popcorn, fantastic. If it's $1 million, if it's $10 million in extra income, that's money they didn't have 2 years ago. Merchandise, same thing. Expect that the AMC Cinema Suites will start contributing some extra million or several million or 10 million. I don't know what it'll be, but they are expanding the income streams. I have very, very reasonable, much lower than what you're hearing from the pumpers, very reasonable expectations, and I'm happy that we have these extra income streams, whatever they are. But they're not the ridiculous numbers that you're hearing from these other people. But it's all good. Distribution deals, I'm looking for some more of those in 2024. Taylor Swift and Beyonce were good adders to Q4. They saved our ass. And maybe we'll get some more good news on that in this year. Beer and wine, he keeps on teasing that, but we don't really have anything on that yet. So we'll talk about that when it comes. But what I expect is they're gonna white label somebody else's product. I keep on hearing this goofball in Boston talk about, they're gonna spend a lot of money buying a vineyard. No, they're not, dumbass. They're not buying a vineyard. They're going to find a wine and beer producer who will put AMC's label on their product. Don't you guys know how this stuff works? And then they'll sell it at the same, they'll get it really cheap, a generic product, put the AMC label on it, and sell it as the same price as a premium brand. And we'll buy it, and they'll make a fatter margin. That's good. Get it done. Adam, what are you waiting on? Every little bit helps, but it's not there yet, so I don't talk about it. And I don't expect it to be a company-saving revenue stream, but it's a company-helping revenue stream. Every single one helps. White labeling, BioLife Hemp. Yes, sir. So all of these things are good, but they're not as good as the pumpers on Twitter are telling you. And I'm happy about every single one of these new revenue streams. Over time, they will grow. Over time, they'll grow. Be patient. The more people that go to the movies in 2025 is just more opportunity to sell all of this stuff. If you thought the merch and popcorn, beer and wine were exciting in 2023, wait till there's even more people going to the movies in 2025. That's all I'm saying. As you heard Adam and Sean say, the revenue per seat is really, I forget the words they said right now, but they're making considerably more than they did pre-pandemic on every seat sold in terms of overall revenue. So we don't need to get back to pre-pandemic levels of box office. I want you guys to, those of you that have the right time frame in mind, like I do, I'm looking to 2025. We're not going to need 11 or 11.5 billion in revenue to cross that line into profitability. I'm thinking, some are going to say I'm crazy, 10.5 billion. And we'll see. We'll see if we get there in 2025. I know Rolf and a few other people are thinking 2026. Everybody's got different opinions. We'll all find out together. Blue Sky says, will 2025 be profitable? It depends. I need to see a number of 10.5 billion domestic box office, Blue Sky. That's my minimum threshold that I think is reasonable where AMC could see a profit. So, Michael says, how was earnings? From what I saw, just quickly reading before the call started, we met expectations on revenue. I haven't read any news articles yet, but what I saw was a meet on revenue and a miss on earnings. And AMC's down 0.4%. I mean, oh wait, no, 9%. I was looking at the wrong 452. So for those who were saying it was going to drop to $2.60 after hours, well, you can fuck right off, sir. You can fuck right off. You and your negative energy. We don't want no negative energy vibes. I think that expectations for Q4 were pretty much baked in. We heard good things from Cinemark now, IMAX, and AMC. I think we're safe in this like $4 zone. And that's about where my cost basis is at. So I'm not planning any changes in my position based on what I heard today. All right, guys. Markets with May is starting a call, I think, at 6:30 her time, which is 5:30 my time. And she's going to give you her thoughts in a quick video, probably a live stream. So let's go hear from her. I'm going to thank every one of you for tuning in today. The other big thing that I should mention is Adam Aaron said in this call that there's going to be 3 new Nicole Kidman commercials. He did say that, but he did also say that he's recommending to the board that they cut his targeted executive compensation. And I know a lot of y'all were wanting to see something like that. Some of y'all want him to work for free, but you're not going to get that. But he is recommending to the board that they cut his targeted executive compensation. And I think that's a good gesture while things are still kind of down in the dumps on the stock price. And I applaud him for that. I know there'll be people that complain it's not enough, but he did something. He's listening. So I'm going to go check out May's call. I'm going to re-listen to this earnings call, and I'll do a quick summary video one day this week on the AMC earnings and get that out for you that don't want to re-listen to a 2-hour live stream. Overall, pretty good, but the message is the real moving forward on this company is the second half of this year into 2025. Thank you so much for each and every one of you for tuning in. A lot of old faces that we haven't seen in a while. Thank you guys for supporting the channel, for watching today. Drop me your comments in the video if you're watching this on replay, and I will catch you on the next one.
So you wanna go to war with me? You're talking like you think you're royalty. You think that I'm afraid, but I don't break. I heard you question my stability. You think I'll fall just like a guillotine, but I am here to stay. Won't look away. The storm is coming, so you better start running. No, you can't control it in my